To start over here. All right, let's see. All right, yo, what's up for you guys watching this on the YouTube replay? Appreciate y'all being here. We're gonna be looking at a lot of stocks live. First, I'm gonna do a quick portfolio update. Then we'll get reading into the chat, see what stocks people want me to look at. So here's our portfolio on the day. We're almost at a new intraday high right now. We're only down 0.28%. Our Roth IRA though is up 2.3% on the day, which is cool. Inno data is up 10%. This is like our small cap hidden gem stock that I'm liking right now. And then we also have our risk on portfolio right here. This is our Webull account. Let me type in my password here. How's it going on the day? So we are only up 2.5% all time. We're up 0.23% on the day. We got some big losers in here, of course, like UiPath, Zoom, Enphase, AMD. Yeah, so don't listen to me. I'm not an expert, but we do have some big winners. Like, dang, we're almost up 400% on Robinhood. I regret, dang, look at that. Yeah, that's a new 52-week high today on Robinhood. Robinhood mainly just follows whatever Bitcoin does. So if Bitcoin's doing good, usually Robinhood is as well. You know, SoFi's doing great. And then thirdly, we have our buy and hold portfolio, where once I buy a stock in here, I try and hold it on for the long run. I try not to ever sell it. And yo, what's up, South? He said Live 360. Yeah, we'll check that one out after this. Our most recent purchase has been Coca-Cola Consolidated. Obviously, they're down 3% on the day. I might buy another share or two of this company if they go a little lower, but I'm happy with my position right now. Yeah, South Pacific. We've been looking at Life 360. Oh, what's the ticker symbol for that one? I forgot. So Life 360 is like that app on your phone where you can track your friends and stuff. It's down 5% on the day, but it's had a great earnings report. Let's actually check this out really quickly. So they beat on revenue. Wow, they beat on EPS. They were expected to lose net income, but in the most recent quarter, they actually made net income. So that's actually a huge beat. 5 mil of net income. Yo, Jesse, what's up, dude? I just bought some Coke today. Yo, Jesse, yo, we'll check that out after this too. So yeah, Life 360, they're that app. They have a great balance sheet. I mean, look at this. This is a monster balance sheet. You know, that they're net income positive every quarter. So I do really like Life 360. You know, I think that one might be a good buy and hold. But yeah, Jesse, he said he bought some Coke today, Coca-Cola Consolidated. So yeah, I have how many shares? Yeah, I got 14 shares of this company. I like this one for the low valuation. If you kind of look in the top middle of my screen, they're trading at a 17 PE. So they're trading at 17 times net income. That seems pretty fair. And look at this dividend. This is what's huge, all right? They have a 0.5% dividend yield and only a 5% payout ratio. So remember that, a 0.5% yield, 5% payout ratio. Let's compare that to Apple, for example. So it has literally the exact a higher yield than Apple with a third of the payout ratio. So Apple has a 0.5% yield, but 3x the payout ratio. So that's what's cool about Coca-Cola Consolidated. They have so much room to raise their dividend. You know what? Since we're on Apple right here, let's look at Apple real quick. Yo, what's up, Joseph? Are you holding REGN or did you sell? Yo, I actually sold out of REGN, and they have not been doing too good. But here's Apple right here. Obviously, most of the revenue comes from the iPhone business, and then they have the services business. You know, whenever you buy something in the App Store, you know, Apple takes a 30% fee on that, and it's all high margin for them. And look at the services business. I mean, it's nearly 100 billion of revenue for them a year now, which is crazy. Yo, what's up? Zerup said MSVT. MSVT. Let's see. I can't find that stock, Zerup. What's up? What are your top stocks right now with the current space? Yeah, so you know, I really like Coca-Cola Consolidated right here at this valuation, but my top holdings, if I go over back to my Robinhood account real quick, I love these dividend growth stocks. Like here are my top holdings right here. Carlisle, I like Meta, Google. You know, Meta's having an unexpected rally today. Meta's up 3.5%. So Google as well. I really like Google. So AI play. Um, let's see. Oh yeah, REGN. So look at this stock right here. So there's a company that used their patent. All right. So another company used their patent for like this eye product. It's called Isla. And basically the FDA said that they're allowed to keep on using their patent or it didn't infringe on the anyway, bad news for the company. The stock had a huge gap down. The valuation must be dog cheap. Yeah, 12 times PE. So yeah, that's a very low valuation. And you get a dividend with this company. They're doing major buybacks. Yeah, 12 PE. Yeah, here's the Isla I was talking about. Look at Isla HD. It has seen some nice growth though. It's up 53% year over year, but yeah, that's not great for the company. Um, let's see. Can you do Lucid? Yeah, what's up, dude? So here's a company I would stay away from. Oh, um, MVST. Oh, Zero, my fault. We'll check that one out. Great time to buy DraftKings. Yeah, we can check them out as well. So here's Lucid Group. Unfortunately, this is a stock that I would stay away from this one. And I think they're going to just, do you see how they're kind of at an all time low right now? I think they're just going to keep on slowly hitting new all time lows. If this would load here, maybe, maybe we'll go to Weeble for this. Oh yeah, here's our risk on portfolio. Again, don't listen to me. I'm not an expert. We've lost a lot of money on a lot of stocks, but let's see. LCID. So Lucid Group, if you look at this stock right here, pretty much it's at an all-time low. And here's why. If you look in the top right, you see market cap. The whole company is worth $6.6 billion. Well, if you look at the net income right here, I mean, they're losing like 2 billion plus in net income a year. And look at this. They're not even close to profitability. This company is burning net income hand over fist. So they're losing 2 billion a year. The whole company's worth 6 billion. Not too sustainable. They really need to get profitable for Lucid for me to even consider them. I think they'll just slowly keep on doing lower. I feel bad for them. Yo, what's up, Marie? How's it going? Ethan said CLBR mergers. Wait, CLBR. Yeah, hey, look at that. The stock's at an all-time high today. What do you think of the? I've never heard of this company. It's merging into PEW. I can't find PEW. Maybe that's the new ticker symbol. But hey, they're only a $300 million company. So yeah, very small company. Great news for that stock. Estate Lauder. Let's see a EL. Yo, what's up, Jack? How's it going, dude? Gold. Hey. So here we can look at IAU as well. So here's Estate Lauder. This is the only stock left in Michael Burry's portfolio. If you remember the guy from like the 2008 short or whatever, the big short, Michael Burry, he only owns one stock now. And the only stock he owns is actually Estate Lauder. This is a beauty and cosmetics company. They just do skincare, makeup. And unfortunately, if you're wondering like, hey, why is the stock done so bad? Well, it's because of this net income right here. If you look last quarter, they lost 600 million of net income last quarter. 200 million the quarter before that. So if you average out the 4 quarters, they're not making net income. This is a money losing company. But that's why the stock has been hurt so much. Michael Burry is saying that he thinks it's a good risk to reward to buy here. So hey, they're a beauty and cosmetic stock. I know they have some I mean the margins are negative right now, but I know beauty and cosmetic stock have great margins. But look at IAU. This is the commodity of gold in an ETF. IAU, I'd rather buy the ETF gold than physical gold. It's easy. There's less fees. You can sell it instantly. You don't got to go to a pawn shop and sell it for a spot fee. But yeah, gold is up great today, 2.5%. That's good news. Yeah, gold's been on a run. Let's see. DG Dollar General. Yeah, dude, Dollar General, the dollar stores have not been doing too great. Like if you look at them in 2022, they were $230. Now it's 97. It's not great. If we look at the dividend here, they have a 2.5% dividend. The dividend is safe. That's the good news. The payout ratio is only a 46%. So that's the good news. The PE is a 19. Let's see the net income. Yeah, here's why Dollar General's been hurt so much. Their net income fell 50% from the previous year. That's a huge drop. Net income fell 52% from the previous year. So that's the bad news about Dollar General, but it looks like it's starting to see a little bit of a recovery. Yeah, their dividend's safe, 2.5% yield. Let's see. IOVA. Yeah, sorry if I don't get to all the stocks here. I'll get to all of them, I promise. I try to go pretty quickly. Appreciate y'all being here. If y'all want to hit the follow button, I'd appreciate that. We go live every day, twice a day. So $580 million market cap. Very small company, and the stock's at an all-time low. That's bad news. I don't know if I'd want to buy them. Let's see. What's the revenue doing? So, the revenue just exploded. Look at that. They used to have no sales, and now their sales have exploded. They're still, that's a lot of net income to lose. So they're losing like 100 million a quarter, and the whole company is worth 580 million. So they're losing literally 10% of the company a quarter of net income. So they really need to get profitable. They might be priced for bankruptcy right now. So that might be the bad news. But I like that huge sales growth. What about oh yeah, MVST. What's up, Zero? Sorry about that. I didn't get to that one. So here's Microvast. So this is a company that is just constantly beat on earnings, and that's the good news. They were priced to bankruptcy. The stock was 15 cents. Now, it's $3.60. They're worth over $1 billion now, which is great news. And if we look at what the analysts were expecting, if you kind of look at the orange line here, the analysts were expecting them to lose 2 cents of EPS, but they made 19 cents of EPS. It was a huge beat. That they actually made 60 million of net income. And that's why I think the stock has exploded. No analysts were expecting that. Yo, what's up, South? Yo, my fault. He said Plug Power. Yo, Plug Power is a stock that unfortunately I don't like. I lost a lot of money on ChargePoint, and this is kind of the same thing. So here's the one thing I look for in a company. If you look at how much they're worth, you see market cap in the top right. Oops, market cap in the top right. You could buy the whole company for for only 900 million. So this whole company is worth $900 million, right? And let's go to the net income. Well, in the most recent quarter, they lost 200 million. The quarter before, $1 billion of net income. They're just they lose money so much. So I cannot recommend this one. I think they're just going to slowly keep on going lower. They're literally, that's not great. Those huge net income losses. So I wouldn't, if I had I wouldn't add to my position in that one. Actually, I'll show you this real quick. I just like being transparent. Here's some of my losses. One of my biggest losses, and I'll show you this, CHPT. So ChargePoint, they just have those chargers. So look at this right here. I sold all my shares. This is sometimes where it's good to take the loss. I sold all my shares at $2.85. I sold them all at $2.85. Well, here's where I bought the shares. Let's see if it'll show me. I was buying this stock. Oh, it was before that. Right here. Dude, I bought this stock at $21. I bought it at $21 and sold it all at $2. So yeah, for 66 shares. So I lost a lot. That's why you got to look at the fundamentals. If we look at the financials on that one, they're also just burning net income. They're a huge money losing company. Let's see here. What about DKNG? So yeah, let's check them out. So this company has kind of been flat for a couple years just because they're struggling to make net income. The growth is good, the sales growth is good, but the profits aren't. So if we go to the revenue right here, revenue's up 20%. That is great growth. But if we look at the net income, they're still losing net income. So I'd love to see them go net income positive. They only lost 33 million in the most recent quarter, so not much. But yeah, that's the thing about DKNG. I want to see them consistently make net income. What is ACM Research? Is there a ticker symbol for that one? Yeah, what's ACM Research? I'll check that one out. Oh, yo, someone said APLD. So yeah, check this out. APLD, we've been talking about this one for a while. This is the company that's owned by Nvidia, and they're up 51% on the day. And here's what's so crazy about this stock. They just got a cloud service deal from CoreWeave, and check out their cloud service business. It's already seen massive growth. It's up 220% from the previous year. This is what I look for in a company, ones that are growing their fundamentals, and this one certainly is. And also, here's what I think is the truth about APLD. If we go to Nvidia's portfolio, Nvidia is so big, they own some individual stocks. Okay, here's Nvidia's portfolio right here. CoreWeave and APLD are both owned by Nvidia. And what just happened? CoreWeave and APLD go into a deal. Quite the coincidence. So anyway, yeah, look at CoreWeave. Dang, 117 bucks on that one, up 5.7%. Anyway, let's keep going here. That's Nvidia's portfolio. Someone said NU. Warren Buffett and Berkshire Hathaway actually owns some of NU stock, and this is a crypto bank out of Brazil. And that's where Bitcoin's really popular in South America because their currency sucks. And you won't believe this growth. This is incredible, and this is why I really like this stock. The net income is up 47% from the previous year. They're making 500 million plus of net income every quarter, and it's expected to grow. So they're making 2 billion of net income after tax profits a year, and it's growing. I really like that one. So the only bad news is that they have exposure to they have a lot of exposure to crypto. Oh, well, TikTok just took down the live stream. That is not good. Let me just log into my second account here. So yeah, that's the thing about NU. They're a crypto bank, and I and Bitcoin's done great, so that's kind of the good news there. So all right, give me 1 second here. Let me show you the portfolio. Give me just 30 seconds, and then we'll be right back. I just gotta go. You'll be able to see the screen in 10 seconds. We'll look at Waste Connections. Yeah, hold on. Let me look at the YouTube chat here. We'll get to all the stocks. Yeah, dude, my TikTok account, they just took me down. Yeah, we'll look at Waste Connections. I'm streaming on my second account right now though. I'm getting it logged in. All right, there we go. You should be able to see the screen now. We'll get to all the stocks. Yeah, if you got any stocks you want to look at in the YouTube stream, let me know. I'll get to all of them. I do apologize. We are officially back live. Okay, let's keep going here. So, Google Samuel. What's up, Samuel? Incorporated shares, Waste Connections. What's waste? You mean Waste Management? Waste Management. This is a great just buy and hold for the long run stock. Oh, look at this. This app is saying there's a bullish continuation triangle, and the rise probability is a 93% chance. That's technical analysis, but this is an industry that's going nowhere. People are always going to have to throw away their trash. Yeah, dang man, TikTok done took me down. Yeah. What's up, Ryan? So yeah, Waste Management, they also have a nice dividend on this company, a 1.3% dividend yield on Waste Management. But look at the shareholders. Look at the second largest shareholder is Bill Gates. So or the Bill and Melinda Gates Foundation. They own 8% of the company. So hey, Warren Buffett sees something in Waste Management. And yeah, the stock's at an all-time high today. So yeah, congrats if you own them. Um, Waste Connections, WCN. Oh, okay. What's up, Bacon? He said CDLR. Yeah, and then we'll look at Waste Connections. So I've never heard of this one, CDLR. So K Deller, a $1.7 billion company. It looks like they're profitable as well. Time Charter Services. Can we look at it on a? Nope. Let's just go down here. So the revenue, wow, look at that huge growth of the revenue. It's 65 million in the most recent quarter, up 240%, and they're making net income every quarter. Really good balance sheet. I mean, they're growing their assets. So I like that they're profitable. They don't pay a dividend. Oh, so this is a European company. We'll switch their currency to US dollars. But this company, yeah, looks very interesting. They're making net income every quarter, but they are European. There might be some foreign taxes if I bought that one. So let's see, WCN. So Waste Connections. So this is a Canadian company. Okay. This one actually looks very interesting. So Waste Connections, let's see. They have a dividend, a 0.6% dividend yield, not bad. It's commercial, residential, landfill. How's their landfill revenue doing? It's down 5% year over year. Nothing too bad. Let's go look at the net income. So looks like they had a one-time adjustment last quarter, but normally they're making, yeah, basically 400 million of net income every quarter on WCN, which is cool. And they're so basically the Canadian Waste Management. That's pretty interesting. Um, yeah, if you guys got any stocks you want to look at, let me know. What's up, Luffy? He said CROX. Yeah, Crocs. Yo, y'all heard of Crocs, like the shoes? Their stock is publicly traded and they trade at a super low valuation. Look at this. They trade at a 6 PE. So they trade at 6 times net income. You know, that is a cheap valuation. And I think some of it's because of this. They acquired Hey Dude, if anyone's heard of Hey Dude before. And if we look at the growth of this, you know, it's down 20% from its peak, or 25% from its peak. So there's just no growth of the Hey Dude brand. But if you look at Crocs, hey, Crocs is up 2% year over year. So they've seen a little bit of slowing growth, but I love the margins on this company. Like this is a company that's holding up their, or growing their margins actually. Yeah, they grew their margin 20% or to a, well, they're average like 20%. But anyway, they're making net income every quarter. I like Crocs for that. And the low valuation. They're kind of like an Abercrombie and Fitch, like A&F. Has anyone heard of, yeah, Abercrombie and Fitch? All these apparel stocks, like an American Eagle too. If we look at the PE of these companies, I mean, look, American Abercrombie and Fitch, they trade at 7 times net income. You know, they trade at super low valuations. Some of these apparel stocks. But you know, actually the worst example is Nike. You know, Nike, I dodged a bullet with this one. Look at that. Nike, I sold all my shares of Nike at $78 and now it's at $61. So Nike has not been doing too good, and that's because they just lost their growth and their margins. You know, the revenue was down 10% year over year on Nike and the net income was down 33%. So if we look at their net margins, the net margin on Nike collapsed 25%. They have a nice yield here, but they actually couldn't afford the dividend in the most recent quarter. It hasn't updated that payout ratio. So, yeah. Yo, ACAD said, man, check TRN right now. I'm down over 30%. Is it a good hold? All right, let's see. So, Trinity Industries, I feel bad. He says he's down 30% on the stock. Let's go check out the fundamentals. So, you get a nice yield here of a near 5% dividend with this company. Let's see. Retail Products Group. Railcar leasing and services, huh? So that's actually pretty new. So here's why I think that, yeah, if you're wondering why the stock has fallen so much, I think this is why. The revenue is down 27% from the previous year. So the revenue is down 27%. But this is the good news. They held up their margins great. The net income only fell 1% from the previous year. So they held up their margins quite well. You know, I would probably just hold on to that company. I mean, they have a nice yield. They can still afford the dividend. I would just probably hold on to my shares. You know, it's not the end of the world for that stock, but they do have a high yield. Yo, someone said, or ASML, what's up, man? Yo, Catherine, what's up? So here's ASML. This is like the chip making manufacturer. They have three main customers. It's Intel, Samsung, and one other person. You get a 1% yield with this company. Like that's a way higher yield than an Nvidia. And look at the net income. They're extremely profitable. I mean, they're making 2 billion of net income a quarter, and the net income was up 92% from the previous year. So they grew their net income very nicely. Last quarter was a record. They had 2.88 billion of net income, record net income quarter. And for some reason, the stock is not at all-time highs. You know, it's not at its record. So that is interesting. And they have that one quarter every year where they print free cash flow. I mean, look at last quarter. Last quarter they made nearly 10 billion of free cash flow. So I do like ASML. I think that one's a good hold. They're super profitable, pretty fair valuation. So Mr. What said PSCC. So this is Prospect Capital. This is actually a BDC. They're one of the companies that have to, by law, pay out most of their income in the form of a dividend. So their high yield is like that because of the law. And yeah, dang, look at that. A 20% dividend yield. Unfortunately, the stock price is telling me that it's not sustainable. I feel bad if you own that one. Yeah, the stock is, dang, not been doing too good. Yeah, they've been missing on their expectations. Yeah, they missed on all their expectations. So that must be why the stock is falling so much. Yeah, they lost. If you average out the 4 quarters, they've lost way more net income than made. So maybe their dividend isn't sustainable. I'd be careful with that one. I live in NYC. I'm about to run up on them. Wait, run up on. I forgot what we were talking about. What's up? Oh, Oh, yeah. Wait, Joby. Then we'll look at Roblox. So here's Joby Aviation. So this company, they're only or they're a $6 billion company actually. I think they have some contracts with some people because right now, if you look at the revenue, I mean, it's kind of terrible. I mean, it's only 55,000 of revenue. The revenue's nothing, but I think they have some contracts where in the future they're gonna make some revenue. Let me look at the expectations. I mean, not in the next 2 quarters. So, I'd have to do some more research on this one. I don't know. For right now, I'd probably just stay away from that one. But I wanted to look at Roblox. Actually, let me go to Kathy Wood's portfolio because Kathy Wood owns some Roblox. So yeah, here's Kathy Wood's portfolio. She's the one that owns ARKK. And yeah, here's RBLX, Roblox. Look at that. They've done great. They're at a new 52-week high today. And I think it's because of the growth of the free cash flow and the users. Like, look at this metric. This is their daily active users. Roblox has 97 million daily active users. So that's really impressive. And if we look at the free cash flow, it's 430 million, up 120% year over year. Incredible growth. But the bad news is the net income losses here. They're losing like 200 million plus in net income a quarter. It is getting a little better though. They are losing less money, but I really want to see them get profitable. But I think that's why the stock has done so good. That huge free cash flow growth and user growth that probably beat expectations. So anyway, uh let's see. Um HMR. What's this one? What's up, Val? HMR. So Hyder Maritime Holdings. This one looks really risky. So $109 million company. So the whole company is worth $109 million. Let's see the financials. So for the full year 2024, they did 28 million of revenue and only made 1.9 million of net income. At least they made net income. They didn't lose money. That's the good news. But I mean, nothing's really blowing me away here. I mean, look at that. The revenue's down 41% and the net income's down 90%. So that might be why the stock has done so bad. I mean, the fundamentals have just fallen off a cliff. So I'd be careful with that one. Oh, Dollar General reports earnings tomorrow. I didn't know that. Oh yeah, Delta Airlines. So out of all the airlines out there, out of all the airline stocks, I will say Delta Airlines is the most well run. Financially, like American Airlines is garbage. But Delta Airlines, here's the good news. They're actually making net income every quarter and quite a bit of it, like 900 million plus a quarter, just about. And you get a dividend, a 1.13% yield, and only a 9% payout ratio. So a fair valuation, fair payout ratio. I do like Delta Airlines more than all the other airline stocks. But I don't expect them to outperform the market in the long run because they just haven't. What do you think of APP? So yeah, this is AppLovin. Dude, I love this stock right here. If you're wondering like, hey, what happened? How'd the stock go from, like $40 all the way up to $300 or $400 today nearly? Well, here's why. You won't believe this. Look at their advertising revenue. This is why they deserve all the hype. Their advertising revenue just in the most recent quarter was 1.2 billion, up 70% after being up 90% the previous year. I mean, this is what you call like pure organic growth. It's incredible. And it's not just top line, it's bottom line. Look at this net income. Oops. They made 570 million of net income just in the most recent quarter. That is so impressive. And that's why, like, they're a profitable company. They're going to be making 2 billion plus a year, probably like 3 billion. So let's see, what's the market cap? Ooh, so yeah, they're realistically, they're trading at 40 times net income. If you look at the PE right now, it says 71. In my little mind, they're trading at 40 times net income. based off the growth that I kind of see there. So I still really like that company. The valuation might be a little high to buy today, though. I do really like them. Oh yeah, and Tempus AI. This was bought by Nancy Pelosi's husband, and I love the growth here as well. Free cash flow is better than net income. I like looking at net income because free cash flow does not include the stock-based comp. Um, and I don't want to get into that, but basically, you got to look at the gap net income because they could make like Roblox made 400 million of free cash flow the most recent quarter, but lost 200 million of net income because of their stock-based comp. So here's Tempest AI right here. They're losing net income right now. This is the good news. Look at the genomics business. This is incredible growth. It's up 89% from the previous year. I mean, I don't know what happened in the most recent quarter, but it just jumped up. So the genomics business is doing great, and the data and services is up 44%. They're both segments of business are seeing incredible growth, and they're getting closer to profitability. So I do like Tempest AI. It's probably like a hold. Um, what do you think about Mama's Creations? Ticker symbol MAMA. Yeah, how's it going, Gardy? So let's see. MAMA. I haven't heard of this stock before, actually. So they're a very small company. They're only worth $300 million, but they've had a lot of stock price appreciation. With a small market cap, I like that because there's room for them to grow. And look at that. So they're worth 300 million, but they're making net income every quarter, like a million a quarter. So that's great news that they're profitable. And the revenue's up 25%. That's good growth. So I wonder what this company does. Let me actually read here. Their products include meatballs, turkey meatballs, lasagna roll-ups. So like some pre-packaged food company. It'll add them to the watch list. I've been looking at this stock right here. Has anyone heard of LaCroix or Fago? It's like a drink. That drink is owned by this stock right here. It looks like a bond. I mean, look at that stock price. I mean, it's just been flat. They even pay a special dividend. They just did a special dividend of $3, which is a 9% return nearly. Anyway, let's keep going here. Thoughts on COF after the merger. So Capital One Financial. So yeah, they're expected to see a lot of growth, from the merger, obviously. So yeah, they're just a credit card consumer banking company. Yeah, they collect those high margin credit card transaction fees. It's up 6%. They have a nice 1.3% yield, very low payout ratio. And yeah, they're making easy $1 billion plus in net income every quarter. So they're making a lot of net income. 16 PE. I like them. Um, let's see. Riot. Let's see. Oh, so Riot, this is the Bitcoin mining company. So basically, all this company does is mine Bitcoin. Yo, what's up, EFIM? What about TAYD? We'll check them out after this. I got you. So here's Riot Platforms. Again, all they do is just mine Bitcoin. So usually this stock just moves with Bitcoin. But unfortunately, they haven't kept up with the price of Bitcoin because Bitcoin's like 5% off all-time highs when this is like 50% off all-time highs. Yeah, look at that. 88% of the business is just their Bitcoin mining revenue. And you mainly just want to look at the balance sheet for these kind of companies. All those assets are just the Bitcoin on hand. So yeah, basically they just own a bunch of Bitcoin. What about TAYD? Let's check it out. TAYD. So Taylor Devices. Let's check it out. The Wealth Shift. I think it's in the link in the description. I'm not too sure if it's, but it's a brokerage. It's called Mumu. Anyway, so here's TAYD, Taylor Devices. So let's see. They don't pay a dividend. That's all right. A 14 PE, so a very fair valuation. 15 times net income. So they're not. So this is a very small company. So yeah, look at that. The revenue's 10 million. But they made 2 million of net income. So that means they have like a 20% net margin. Yeah. The net income did fall 25% from the previous year. That might be why the stock has kind of been struggling recently and why it's off its, peak because of the net income decline. So we want to see some growth come back because if we just look at the revenue's down 13% year over year. We want to see the growth come back. Really good balance sheet though. Look at that. Probably like a debt-free company. They're interesting. Yeah. What about PepsiCo? Yo, what's up? How you doing? So let's check out Pepsi right here. I like this one. I love their brands. I love Cheetos, Doritos. And hey, if y'all are enjoying, please drop a like for me. I'd appreciate that. If y'all want to support me, I'm streaming on YouTube and TikTok. Go watch it from the YouTube stream. It's in the link tree in bio, first link there. So here's PepsiCo. They have a nice yield of 4.2% dividend yield, and the payout ratio is a 76%. That's the part I don't love. The payout ratio is getting a little bit high, 76% payout ratio, but still great. I think Pepsi, I can trust them to keep their dividends safe. They're making over 2 billion of net income every quarter. So I do like Pepsi. So yeah. They haven't. The weird part is they haven't been doing as good as Coca-Cola. Like if you look at Coca-Cola, they're pretty much, they're pretty much at all-time highs, and PepsiCo is way off its highs. So that is a little weird. Why is stock-based comp such a bad thing? Because instead of paying an employee like cash, $100,000 of cash, they pay it with stock, and that stock is a non-cash expense. It doesn't show up on the net income or the free cash flow. Sorry. So a company like could have free cash flow because they're not paying employees with that money. So yeah, Anthony said NEE. So this is NextEra Energy. This is the company that owns all of Florida pretty much. It's a utility company, a regulated utility, a nice yield on this company, a 3% dividend yield. It's completely sustainable, a 61% payout ratio. So they have room to raise it. And they own Florida Power and Light. That does $4 billion a quarter of revenue for them. So if you live in Florida, you most likely have a utility bill through them. And they had a one-time adjustment. They're usually making like $1 billion plus of net income every quarter. Dividends super safe. I like NEE. Whoa, what's up, Jeff Mack? He said, what a great day. All 12 stocks I have are green. That's great, dude. That's great. Best nuclear energy ETF? Ooh, I don't know. There's the uranium ETF, but this is just uranium. As you know, nuclear energy nuclear facilities are powered by uranium. That's where the splitting of the uranium atoms and uranium fuels the nuclear energy facility. My main nuclear play is CEG, Constellation Energy. Now, this company has the largest, out of any publicly company, is the largest exposure to nuclear energy. They have the most nuclear reactors out of any publicly traded company. So CEG is your pure nuclear energy play. And I'd rather buy CEG than like an OKLO startup. Let's see, FLO. What's this one? FLO. Flower Foods. Have you ever invested into shell companies? I don't think I have. So here's Flower Foods. Dang, this stock is not done too good. Look at that. So $3.5 billion company. Let's check out the dividends. So they have a yield, a near 6% dividend yield, 81% payout ratio. That's a little high. So the net income fell 27% year over year. That's probably why the stock has fallen so much. Check this out. So the revenue's down 1%, but the net income fell 27%. So what does that mean? That means their margins have collapsed. They only have a 3.4% margin now, and it fell 26%. So that's why I think the stock has fallen so much, margin collapse. But I want to see the growth come back to that one. What's your opinion on penny stocks? I don't love penny stocks because they're too risky. They're fun to trade, but not buy and hold for the long run. Like the Russell 2000 just doesn't beat the S&P 500. So here's NVTS, Navitas Semiconductor. Now this company just had a huge partnership with Nvidia. So that was this huge gap up right here. It went from $1 all the way up to $5, literally 5x'd on the Nvidia news. And it really saved the company because they were priced for bankruptcy before that partnership. So that's why they went up so much. The revenue before today was down 39%. They're losing a lot of net income, and that Nvidia partnership hopefully saves the company. So yeah. ABIT. What's this one? ABIT. So he said this is a small cap risky. So yeah, you're right. $200 million company. So it has Bitcoin in the name. I wonder what that means. Maybe they hold some Bitcoin. So yeah, look at dang. That is not the balance sheet you want to see. Way more live. They have no assets. Yeah, they have no revenue either. So no revenue and no assets. I'm not gonna. There's nothing to look at there. I would not buy that one. Yeah, again, nothing in this is financial advice. I'm not an expert. I've lost a lot of money on a lot of stocks like these right here. So always do your own research. Let's see. I invested $1,000 into RGC back in January. Oh, what's up, engineer? RGC, what's that one? It must be up a bunch. RGC, maybe can't find that one. MGNI Trust, MGNI, or maybe. Oh my goodness, we're gonna okay. MGNI. Okay, Magnite. That sounds like a Pokemon. Okay, let's see. So, $2.4 billion company, and not huge, $2.4 billion market cap. No dividend on the company. Provider of a platform to all its customers, buyers, and sellers. So the revenue, it's not great growth. The revenue's up 4% from the previous year. They did lose net income, but less than the previous year, so that's good news. So it's like a mixed bag here. That might be why the stock isn't anywhere near all-time highs, just because of the slow growth. I mean, revenue's only up 4%, 3% the last quarter, but they are trending toward net income positivity. Like probably this time next year, they're going to be making net income every quarter. So that's the good news. They're profitable now. Yo, Northern Jays, you said do Gap. Yo, did y'all know Gap was publicly traded? Like it's like when you go to a mall, you see that store with like the basic clothes. Well, here's their stock. Let's check them out. So I was looking at this one the other day. They actually have some decent financials. If we go to the net income down here, yeah, look at that. The Gap. This is crazy. They're making over 200 million of net income a quarter, and it's grown substantially from the previous year. So Gap is making 200 mil a quarter. You get a yield here, a 2.7% dividend yield, and only a 27% payout ratio. So fair payout ratio. Again, I just don't think this is the kind of stock that'll outperform the market in the long run. Like, look, Gap is the same price that it was back in 2001. So imagine that you bought Gap in 2001 and you're at the same price. So, hey, Jeff said DOCN. So this is DigitalOcean. This is a cybersecurity stock right here that unfortunately they just haven't been doing too good. When I don't get why, because the everything I see is doing great. I mean, if we look at the analyst expectations, they're beating on revenue. They just beat like crazy on net income and on EBITDA. Let's see the free cash flow. Free cash flow went negative in the most recent quarter. That's not too big of a deal because we look at net income. Yeah, they had a record net income quarter, and yet the stock isn't doing too great. So I need to dig more into the numbers here. I wonder why the stock isn't doing too great. But I do like that one as a cybersecurity name. Greco said IBIT thoughts. So yeah, this is basically just Bitcoin. So Bitcoin in an ETF. So if you wanted to buy Bitcoin, instead of buying it, for yourself, you could just buy IBIT and you buy it through an ETF that's SIPC insured for up to 250K. So you're good with that ETF. Ticker Fun, FUN. What is that one? Six Flags. Okay, so yeah, Six Flags Entertainment. So the stock has been flat since 2014. So for a decade, the stock hasn't moved. Unfortunate. Probably COVID really hurt their business. Let's see. Are they making net income? So yeah, dang, look at that. In the two most recent quarters, they lost 200 million, 200 million. So they're kind of losing a lot of net income. The revenue's gone up though. So they had an acquisition. That's what that is. Look at the assets, how they just exploded. They like acquired it, something. I don't know. I'd be careful with Fun. I mean, I don't really expect that to outperform the market in the long run. Yo, B said SMCI, Super Microcomputer. Yo, I do own some of them. So I own 10 shares of them, with these risky companies. You don't want to have a huge chunk of your portfolio in them because they're so risky. But here's what we'll look at it on here. That I like Supermicro, low valuation, 23 PE. They just had a $20 billion contract deal with Datavolt. So like within the past couple months or so, this revenue is expected to keep on growing. So net income margins are being hurt a little bit. They're still making net income every quarter, but margins are being hurt right now. So Supermicro, I don't want to have a huge chunk of my portfolio in that one because they are risky. But I do like them. I do own them. Warren Buffett put 3.1 mil into it. Oh, Berkshire Hathaway. Yeah, that's his company. Yeah. Luffy said thoughts on DPZ. Yeah, we'll look at Berkshire Hathaway after this. Remind me. Yo, Serban, what's up, dude? So, Huckleberry, did you see Honest? Yo, we'll look at Honest. So here's Domino's Pizza. So, in a recession, people buy pizzas, more, whenever there's a football game day, everyone orders pizza. So, hey, why not own some Domino's Pizza? Yo, what's up, King Picks? So this one has a 1.4% yield. So that's what's cool about Domino's. You get a 1.4% dividend yield. What's the net income on this company? So, wow, look at that. Domino's is making 150 million of net income every quarter. So they're doing great. Yo, what 15? You said I bought APLD and they're doing great. Thanks, dude. What 15? I'm so glad to hear that, dude. Because I have been talking about APLD for a while, and boom, then the Nvidia partnership happens. Nvidia owns CoreWeave and APLD, and coincidence, APLD and CoreWeave have a huge deal together. Let's see. Berkshire Hathaway, BRKB. So yeah, Berkshire Hathaway, this is just Warren Buffett's company. And here's what's really cool about Berkshire Hathaway. There's like so many businesses inside one, like this insurance business. If you heard of Geico before, Berkshire Hathaway fully owns Geico. So that's what that is. They're in manufacturing, McLean, Pilot, all these other industries. So I Berkshire Hathaway is basically an ETF in one. I do like them. They own random stuff like Dairy Queen. They own Dairy Queen. Did you see HNST? So yeah, this is the honest company. They just sell commodities like diapers and wipes. Good news, this company has zero debt whatsoever. Honest is a debt-free company. 550 million of cash. Let's see what their cash pile is. So 550 million of cash and 72 million of cash. So yeah, over 10% of the market cap is just their cash on hand. And here was the great news about this company. They actually made net income in the most recent quarter, 3 million of net income. And that's good news, that they're making net income finally. Revenue's up 12%, nothing crazy, but 12% growth isn't bad. So yeah, they're an all right company. Let's see. I didn't want to put too much. Another Nvidia pumping. Yeah, like we ride. Yeah, exactly. If we go to Nvidia's portfolio back here, Nvidia's portfolio. So CoreWeave? Look, Nvidia bought CoreWeave at $80 or $40. Let me see if it'll show up on the shareholders. Nope, not yet. But yeah, CoreWeave, their IPO has just been amazing. And yeah, APLD is also owned by Nvidia. They're only a $2.3 billion company. And most of that came today. They're up 51% on a partnership with CoreWeave. The thing with APLD is, here's why I like this company. If we look at the cloud service business, this has seen some very nice growth. Look at that. It's up 220% from the previous year. And now it's going to see some even more inorganic growth. So that's the good news with APLD. Oh, yeah. What's up, King Pix? He said DKNG. Yeah, my bad. He said, let's check out this stock right here. So the thing, yeah, they're down 6% on the day. I wonder if there's any news. Um, I wonder if there's any specific news here. So let's see. They met expectations in the most recent quarter. Here's the bad news about DraftKings. Here's why I think the stock has kind of been flat since 2020. They're struggling to stay net income positive. Like if you average out the 4 quarters, they're obviously losing more net income than make. We want to see them just consistently make net income, but they only lost 30 million in the most recent quarter. Trends getting better. Great sales growth. The sales are up 20% year over year, but they're not making any net income yet, and I think that's why the stock has been kind of been flat. Illinois new taxes. Is that what's hurting DKNG? I would believe that actually. That's interesting. Let me go check the watch list really quickly. What's moving on the day? So these are random stocks. I haven't looked at a lot of these. The metals company, Open Door, GoPro. Yo, look, anyone heard of GoPro before? Yo, that little camera company, they're literally going bankrupt. Look at this stock price. The whole company of GoPro is only worth $96 million now. Stock's pretty, it used to be, $10. Now it's 60 cents. Dang, that's not good. Yeah. Anyway, and Topgolf as well. Let's see what's up today, though. We don't want to see the losers. Let's see what's up. Oh, yeah, Red Robin. They're going to finally go back to making net income, which is a good sign. Innodata's up. That's good news. Here, let me just show you my portfolio. We haven't looked at my portfolio in a while. This is my main dividend growth account. Pretty much, I just like to buy and hold dividend growth stocks. And here, look at that. We're at a new intraday high. We just went green. We're about to go back to green on the day. That would be great. Here are all the stocks that we own in here. Meta's doing great. 3.5% green day on Meta. And here's our Roth IRA as well. It's not huge, $1,000 Roth IRA, but here are the 3 stocks we own in here. Innodata is doing great. But anyway, yeah, if you guys got any stocks you want me to look at, let me know. Yeah, Gunnar, APLD is on fire. Yeah, hey, thanks, Anthony. I appreciate you. AMD, yo. Actually, let me go look at that one. So if we go to our bigger losers right here and look at this. So we're down on a lot of companies, Zoom, Enphase Energy, and then there's AMD as well. We're down 8% on them. Nothing crazy. This is like an Nvidia competitor. They don't pay a dividend. Oh, I just looked up Nvidia. So here's what I really like about AMD. It's a big data center play. So, and the valuation's pretty fair. Like the stock has not done too hot, but check this out right here. If you buy AMD, this company has a 16% PC GPU market share. So a GPU market share. But look at that. Half the revenue actually comes from data centers. And check out the data center growth. It is up 57% from the previous year. So very impressive growth. Yo, Brian, what's up, dude? How's it going? So yeah, data center growth is great. And so is the bottom line here. Look, the free cash flow is up 92%. The net income is up 400%. Monster balance sheet on this company. No net debt. Yo, what 1.5? No way, man. Thanks for all the gifts. The dinosaur and the roses. No way, dude. I appreciate you, homie. Check into AGNC as a dividend. So I've looked at this company before. We were actually looking at one not too long ago. Here's the thing with AGNC. So yeah, you get like the crazy dividend, but look at this company. Like this is probably not the kind of stock you want to own over the long run. Um, like it just won't outperform the market in the long run. Like, look, it's down 8% the past year. The past 5 years, it's down 31%. You know, if we compare that to like an S&P 500, like on the 5 year, they were down 31%. Look at the S&P, they're up 100% nearly on the 5 year. So just, yeah, you get the high yield. You would buy it to maximize your dividend income, but you probably won't outperform the S&P 500. Yo, Edzilla, how's it going, man? Um, Oh, Matthew said WYNN. And then, oh yeah, Hood as well. Remind me to look at Robinhood. I want to look at them. So here's Wynn Resorts. Um, the stock has not done too good, actually. Look at that. Wynn Resorts, same price it was back in 2012. So not great. They do have a dividend. They brought back their dividend. 1% yield on this company. Not bad. So yeah, their Las Vegas operations, 36% of the business. It's down 1% year over year. Nothing crazy, down 1%. Wynn Palace, how's that doing? Down 8%, down 19%. So, okay, it's seeing a little bit of slowing growth, but they are still making net income every quarter. That's the good news. Um, if you kind of average it out there. Anyway, it's a hotel business. It's tough. It's tough to be in the long run. Let's see. How about BROG? What is this stock? Yo, my phone's getting low here. We're on 4%. We gotta hustle. I need to find my portable charger. Yeah, dang, I would only $160 million company. They're down 9% on the day. Brew Energy, oil storage. So yeah, I would they don't have any revenue. So that's not good. So yeah, I just stay away from this company right here. I mean, it's just a really small market cap. Nothing's yeah. Oh, yo, thanks again, What15 for the 5 roses. I appreciate you, man. Thoughts on IMNN? What is this one right here? Wait, IMNN. Immunon, huh? So look at that. They've had a nice little rally, a huge volume spike. So there must have been some good news here. They're still an extremely small company, only 50 million. And they're a revenue-less company. So look at that. If we go to the revenue, says zero. That's from 2022, but from 2025 right now, they have no revenue. So this is a revenue-less company. Maybe the reason they went up is maybe they finally got FDA approved on something. Maybe they can finally sell a product. I don't know. Thank goodness, because they're losing a lot of money right now. Balance sheet's not looking good either. So yeah, let's see. I wonder what that news was. Did you end up buying during the market fall in April? I sure did, Huckleberry. That's where I like loaded up on Comfort Systems down here. I kind of DCA'd all on the low here on this stock and a lot of other stocks like Amazon. That's when I bought Amazon on the April dip right here. I loaded up on Amazon. I love that company. So, and Amphenol Group as well, bro. This has been like the best performer. New all-time high today on this company. I literally bought this company April 3rd. Anyway, let's keep going here. Digital Turbine. What's the ticker symbol for that one? Do you think Salesforce is undervalued? Ooh. Oh, wait, I wanted to look at Hood. So, yeah, Robinhood stock, new 52-week high on this company. Congrats if you own Robinhood. And, oh, yeah, I want to look at JD as well. So, I do own a little bit of Robinhood. I regret, I sold most of my Robinhood position a long time ago. Yeah, I sold 50 shares at $36, and today it's 67. So, I missed out big time selling early on Robinhood. That's why you sometimes just let your winners win. Don't sell out of the great companies because they usually just keep on going up. And yeah, Robinhood, I'm up near 400% on them now. That's crazy. I think that's my best performing stock in terms of percent gain. But yeah. Let's see. Oh yeah, but Robinhood, yeah, I forgot to talk about their highlights. Yeah, the reason the stock's doing so great is because of Bitcoin. You know, Bitcoin's at an all-time high, and just the growth of this company is phenomenal. The sales are at a record, up 50% from the previous year. Also, net income here. People can take Robinhood serious because they're making net income every quarter, hundreds of millions of dollars every quarter. When if we zoom out, they used to lose hundreds of millions of dollars every quarter. So Robinhood has really turned things around. So I do like them. Oh yeah, so let me go back to Salesforce right here. My fault. So Salesforce, they just reported earnings. The earnings actually weren't too great. Um, that's the bad news. The earnings weren't too good. Let's see. Service rose 6% year over year. Sales grew 6. Platform grew 14. Actually, that's really good growth. 14% growth on the platform. Integration grew 9. So yeah, if we look at the revenue right here, it's not growing like the software name used to. The sales grew 7% year over year. The net income only grew 0.5%. So they did lose a little bit of net margin, but I'm still bullish on this company. I think they're going to do great. They're going to be a great winner in the long run. They print free cash. I mean, 679 cents. They're making like 12 billion plus of free cash flow a year. So, but the free cash flow only grew 3%. That might be why the stock kind of fallen. It didn't really beat expectations there. So JD stock, yo, Jeff Mack, if you're still here, I gotta find my portable charger. Where? Oh, there's a portable charger. Okay, so JD, this is a Chinese stock, but they have great fundamentals. So hold on. There we go. We're charging now. All right, 3% battery. All right, we made it. So JD.com, the valuation is an 8, because they're a Chinese company. They're trading at 8 times net income. We can kind of see their active customers. They got 588 million. So yeah, but best part is the bottom line here. This is in US dollars as well. They're making near 2 billion in net income every single quarter. So they're doing great. They don't pay it. Oh, looks like maybe they do pay a dividend now. So I don't know. But they can definitely afford to do a dividend. Check out GM. Yeah, General Motors. So this one's performed a little bit better than Ford, but still, you'll probably average like 5% returns a year with this stock. You won't really. Well, actually, whoa, look at the dividend payout ratio. It's only a 7% payout ratio. So they have a 1% yield and a 7% payout ratio. So they have a lot of room to raise their dividend. Yeah, they trade at a 6 PE. They trade at 6 times net income, but they just sell a commodity, car parts and stuff. Yeah, if we look at the net income right here, they had a one-time adjustment last quarter. They're making easy, 2-3 billion of net income every quarter. So actually, they are doing pretty great. I like them more than Ford, actually. Robinhood versus Reddit. Yo, actually, I like the risk reward better on Reddit. I think Reddit is probably a better buy than Robinhood right now. I do own Reddit and I own Robinhood. I love the balance sheet on Reddit. I mean, $11 of the stock is their net cash. So nearly 10% of the market cap is just their cash on hand. And look at the growth of the revenue. I mean, super impressive. It's up 61%. So incredible growth on Reddit. I like that one. Let's see. You still got Hershey. I actually do not own Hershey's anymore. I sold out of them. I forget what I bought with the money, but I did sell out of Hershey's. What should I invest in? Again, not financial advice. I don't know, but one thing I like to say is just buy the S&P 500. Ticker symbol VOO. It's the S&P 500. You should just get 8. Now it's been returning more than that the past couple of years, but you should just get 8% of your money back every year. You start out with $100, it turns to 108, and then the 108 turns into 120, then 120 to 145. You kind of get the compound interest idea. So I like the S&P 500. You got to have that as like the backbone of your portfolio. Pulse said ticker symbol APPS. So Digital Turbine, advertising app makers pre-installed on your phone. So let's see. So very small company, a $500 million company. Look at that. This used to be $100 stock. It was $80 and now it's $5. So let's see what happened there. What happened? So it might just be this right here. So they lost their growth, huge growth for 2022, 500 million, and now it's falling. Yeah, dang, look at that huge fall from 2022, 500 million. Now it's only 370 million. App growth platform. Yeah, so look at their app growth platform. Dang, look at those year over year declines, down 30, down 30, down 10. So yeah, the business just isn't growing. So that might explain why the stock has fallen so much. Are they making net income though? Yeah, so they're losing net income every quarter, not good. And they're not really growing either. So in my opinion, I'd be careful with this one. I can kind of see why the stock is not done too good. Yeah, sales are down another 5 after being down 17. So I'd be careful with APPS. Sorry, that was kind of like an in-depth little analysis there. But I just like to show you the numbers for yourself. You can draw your own conclusion, of course. Yeah, hey, BZZL, if you go to the link tree in my bio, I think it's like the 4th link there. And yeah, if y'all want to support me, go to the link tree in bio, very first link. I'm streaming on YouTube. All I ask is that you subscribe to my YouTube channel. I'd really appreciate that. Go watch my most recent YouTube video. I just made a video called 10 stocks you should never sell. And they're great companies. I mean, I really worked hard on that video. Hopefully you'll like it. If you want to support me, my YouTube channel is called Nathan Robert. Link tree in bio, first link. Anyway, let's get back to this. I don't Watch out for people impersonating me. I don't like sell anything. I don't have a watch out for people impersonating me. This is my only account. All I have is this one TikTok and a YouTube. So anyway, here's Elf Beauty. They just reported earnings. This is a beauty and cosmetics stock. So check this out right here. They just reported earnings. They beat on revenue. They missed on net income, but they improved the margins here. So yeah, wow, look at the free cash flow. It just jumped up to 125 million. That's like a record free cash flow. If we look at the net income grew 94% from the previous year. So that's the good news about the earnings. But yeah, I like this one. There's definitely taken market share. Like if you look at the sales, this is the most impressive part. Look at the annual sales growth. You know, 2022, 390 million. Now it's 1.3 billion. I mean, it's more than doubled. So this is for fiscal year. That's what it says 2025 FY. So anyway, Elf Beauty, insane growth, taking market share from like Estate Lauder and Ulta Beauty. What are some things I should look for? I'd like to look at the valuation, the numbers, dividend payout ratio. There's so much to look at there. Roadzen AI. What's the ticker symbol for that one? Elf just acquired a company last week. Oh, really? I didn't know that. Tell me the ticker symbol. So LYRA. What's this one right here? Lyra Therapeutics. Wow, they're up 360%. If I had to guess, they probably got FDA approved or something. After phase 3 data. So the phase 3 data came in as a success. So yeah, if we look at right now, the company has no sales, look at that, or 180,000 in the most recent quarter, pretty much no sales, 180,000, but now they just got FDA approved to sell our next product, and it's going to bring in a lot of revenue for them. So that's the good news here. Cause yeah, the business wasn't looking good before today. So there's going to be a lot of future growth with the company. That's why they're going up so much. Yo, Jello, how's it going? Hope you're having a good day. Hailey Bieber's beauty brand was acquired by Elf Beauty. Okay, really, Matt? That's really interesting. I didn't know that. Hailey Bieber's. That must be Justin Bieber's like wife or something. BITI? Let's see. Oh, yo, Jesse, good to see you, man. Thanks for the streaming. Yeah, Jesse, thanks for being here. I'm an Elf holder. Wish I had more. Yeah, dude, that stock has gone nuts, and they just have insane growth. So anyway, here's BITI. This is the Bitcoin short ETF. So basically, this does whatever Bitcoin does, but the opposite. So if Bitcoin goes up 1%, this goes down 1%. Yeah, as we know, Bitcoin's pretty much at all-time highs. So this is pretty much at all-time lows. So yeah, you buy that if you're bearish on Bitcoin. Lyra had a reverse split, a penny stock. Oh, really? So that's the company, RDNZ. He said this is an AI insurance company. RDNZ, no results there. Yeah, I can't find that one. I do apologize there. I can't find that one. KULR. I think this is one of the this is one of like the quantum plays. Let's look at them because I don't remember if I like this company or not. So energy management. Okay, no. So energy management platform. Yeah, they have no revenue. Oh, they're in Bitcoin mining as well. So look at that right here. 10% of the whole business is now from Bitcoin mining. And that all happened in the most recent quarter. So it wasn't like that the quarter before. So anyway, that might be why a lot of people are hyped on this stock because they're buying Bitcoin. So yeah, if you look at their assets right here, yeah, that must be why their assets are going up so much. They just bought a bunch of Bitcoin. I think they diluted the shareholder to do that, but they have no debt. So the balance sheet's good, but I just don't like this revenue. I mean, the revenue's $2 million in the most recent quarter. I mean, like they got no revenue. So I would probably just stay away from that company. So yeah. Oh, UNH Group. So yeah, UnitedHealth Group. They have been in the news a lot recently. I heard that with UnitedHealth Group, 50% of the revenue comes from their Medicare business, and if they get accused of fraud, they will not be able to participate in the Medicare for 5 years, and that's half the revenue. So that definitely wouldn't be good. That's how a quality company like UnitedHealth could fall from literally 600 to 300 to fall in half, which is crazy. And I like this company though, assuming, BZZLY. I think if you go to the link tree in my bio, the 4th or 5th, you'll find the app. It's a brokerage. So anyway, I'm not allowed to say on TikTok. I wish I could. Every time I say it, I get banned. So it's in the link tree in my bio if you want to go there, my page. Anyway, 2.8% dividend yield on this company. United Healthcare is most of their business, and they have the Optum RX. We use the Optum RX business. nice yield. And if we look at they're making like 6-7 billion of net income every quarter. Oh, there's literally there is no link tree in my bio. Isn't that nuts? I forgot about that. TikTok removed it. You know what? I'll type it in the chat, but I don't know. You might have to I have to fix that problem. Thank you for telling me that. Actually, I'll fix that after this. But thank you. Okay, dang it. Now that means my YouTube hasn't been linked in my link tree. So if y'all want to support me, just type in on YouTube Nathan Robert. It's the same. Uh this is not good. I'm ending the stream here in a little. So hey, if y'all got any last minute stocks you want me to look at, let me know. I got you. I really appreciate y'all being here. If you wanted the follow button, we go live every day, twice a day. Yo, Jeff Mack said, new 52-week high today on Sprouts Farmers Market. Isn't that great? Yo, I own them as well. Yo, Sprouts Farmers Market, this is like a healthy grocery store. Yeah, dude, ABC, you're right. And TikTok removed the link tree from my bio. It used to be there, then TikTok removed it. Ain't that nuts? So anyway, Sprouts Farmers Market all-time high. This is, boring grocery store, but here's why they're doing so good. Sprouts Farmers Market has amazing pricing power. They're growing their net margins more than any other grocery store. They grew their net margin by 32% from the previous year. That's incredible for a low margin business like the grocery store. So, they're a healthier grocery store. I think they'll have that pricing power, and I really like them. So Sprouts Farmers Market, like a higher growth grocery store, I think I do like them. Let's see here. LBRT. Yo, what's up, Jesse? LBRT. Let's check this one out. LBRT. Don't think I've heard of this one. So, Liberty Energy. So, let's see. So, $2 billion company. The stock's kind of been flat. They must be in the oil and gas industry, maybe. Hydraulic. Let's see here. Hydraulic fracturing services. So, yeah, that might be why the stock's not doing too good. Look at the business. It's down 12% from the previous year. But still, it's like $1 billion a quarter. Let's see the net income, though. Ooh, so look at that. Net income fell 75% from the previous year. That's probably why they just had this huge drop right here. Yeah, huge drop on earnings. Yeah, the margins have collapsed here. Yeah, the net margin is only a 2% net margin now. Look at that. It used to be that's when people were probably buying the business. Look at that, 12% margins. Net margin's great. Now it's fallen to a 2. So I'd be careful with LBRT. I want to see them kind of recover, bring back their margin. Sentinel 1. Oh, what's the ticker symbol for that one? Kenny Ford, how's it going, man? I'll check that one out. BBAI, please. So yeah, Big Bear AI. I don't see anything great about this company. So the whole company is worth $1.1 billion. So this whole company is worth $1.1 billion, and look at that. They lost in the past year roughly $200 million. So they've lost like 20% of the market cap just in net income in the past year. So I just want to see this company get profitable, because in the sales growth isn't like, the sales are up 5% from the previous year, losing a lot of net income. This is one I just stay away from personally. Like, out of all the risky stocks, I would pick a different one, and I can recommend some, or not financial advice, recommend some. So let's see, what does that mean? I've never seen that. Anyway, Root. Let's see. So this is an insurance company. They're doing, what is Closing Cross? I've never seen that. I want to click on it. Okay. You know what? Whatever. So let's go check out the fundamentals here. So let's see. So the revenue, wow, look at that growth. The revenue has exploded. Look at those year-over-year growth rates. It's up 37, 67, 135, and they're making net income. Look at that. In the 3 most recent quarters, they're making net income every quarter. So that's the good news there about the net income. Dividend, no dividend on this company, but that's all right. Yeah, they just started making net income. I can see why the stock has done so good recently, because they were priced for bankruptcy before that. The problem is, IDK, if I should DCA into APLD, how much more that would grow? Yeah, what 1.5? I would just chill on my shares. Just let the position grow into a big one. Yeah, because I agree. It's tough to dollar cost average into stocks when they're at all-time highs. Yo, Anthony said DGLY. What is DGLY? I don't think I've heard of this one before. Anthony T. DGO. And my internet's being slow today. Digital Alley. So let's see right here. So stocks at an all-time low. Not great. So yeah, this whole company, if you look in the top right, this whole company is worth $4 million. So that's an extremely small market cap. Yeah. Like, you just can't trust your money in this kind of stock. The whole company is worth 4 million. Let's see, what do they do? Entertainment, revenue cycle management. How's that doing? Down, not growing. Entertainment, all year-over-year decline. Look at the declines here. I mean, you can't make that up that this is a terrible company. So yeah, I would very much stay away from that company. I feel bad if you own that one because that one I don't see anything there. XRP, yo, that's a crypto. Yeah, I mean, we can look at them. XRP, congrats if you own them. I know they've done really good. The thing with crypto is there's no like numbers for us to look at. XRP doesn't have to report net income. They can't miss on their margins. So that's cool, kind of a cool feature about crypto and Bitcoin. They don't have earnings to report. They trade 24/7. And this one has kind of exploded. Look at that month, went from 60 cents to 250. So crazy gains on XRP. Anyway, let's see. Dark said HTOO. Is that a stock? Fusion Fuel Green. So these are a lot of like micro cap stocks we're seeing here. So yeah, these companies worth 7 mil. So here after this, I'll go do a stock portfolio update. I'll show you how all my portfolios are doing. So this is a European company worth $6 million. Yeah, I'm just not going to look at them. Then they lost 14 million for the past year. So anyway, yeah, I'd stay away from them. So I'll give you a quick portfolio update. By the way, if y'all want to support me, best way to is just subscribe to my YouTube channel. Just go to YouTube and type in Nathan Robert. I'm also streaming on there. If you missed anything, you can replay it. But anyway, look at that. We're almost green on the day. We're down 0.01%. When this morning I watched the market open and I was like, dang it, another red day. We're down 1.3%, within an hour or 30 minutes. And then, well, now we're almost green. So that's the good news. Meta's had a great day. I actually bought a share of Meta yesterday or the day before. Let's see. On May 29th, yeah, I bought a share at $644 and or another share, and it's $670. So good thing up there. But yeah, this is my dividend growth portfolio. Every stock in here pays a dividend. Here's our total percent change on every stock that doesn't want to load. We also have our Roth IRA, new intraday high on our Roth IRA. Let's go. We got, InnoData. They're up 11% on the day. InnoData is doing great. We're up 31% on that position. And then that's our Robinhood account. Then we have our Webull portfolio. So this right here is our risk on portfolio. I just like being totally transparent. All time, I've had this account for like 3 years. All time, we're only up 2.5%. So we haven't done too great in here. But yeah, these are the stocks that I own in my risk on portfolio, like Zoom, AMD, Calmain. That's a really cool company. Actually, if you go to my YouTube channel, I just made a video called Every Stock That I Own. I go over literally every position, every single one of these that you see here. And I tell you why I like them. It's a really long video, but I made timestamps so you can like skip around and if you're wondering, like, I show you the numbers of, like, the same way I've been doing on the stream, I show you the numbers, like, here's why Reddit is so great, or here's why, like, Toast. I love this random company called Toast, their restaurant payment processor, and I mean, the revenue growth, I mean, it's ridiculous. The revenue just hits a new record every quarter. They're profitable, great balance sheet, great free cash flow growth. So there's just so many random companies like that I like. So if you want to see that, go check out my YouTube channel. It's called Nathan Robert. It would be in the link tree in my bio, but there is no link tree right now. So how do you feel about gold GDX? Yeah, I love gold, but it's tough to. Oh, that's the gold miners ETF. So, or the mining ETF. So yeah, it's at all-time highs today. That's great. So is the actual price of gold. The price of gold is ticker symbol IAU, and IAU. Look at that. It's also literally at an all-time high. So glad I learned about InnoData. Yeah, Jeff Mack. InnoData is a really cool one. I'm glad they're up 11% on the day because they've kind of been struggling recently. But yeah, hey, thanks you all for being here. I really appreciate it. Again, only way to support me, just go follow my YouTube channel or subscribe to my YouTube channel. It's called Nathan Robert, link tree in my bio. And or if you want to hit the follow on the TikTok page, we'll be live streaming later today. So anyway, hope you have a great rest of your day. See you in the next one. Thanks again for being here. And thanks for y'all on the YouTube stream. See you, Jeff Mack. See you, Jesse. See you, King Pick. See you, everyone in the YouTube chat. I really appreciate y'all. See you, Brijesh Patel. I said your name wrong probably, but